Good morning. It's Jeffrey Christian from CPM Group in New York. It's about 10:05 on Friday morning, the 22nd of July. I wanted to talk about gold and silver and the weakness that we've seen in prices over the last week or so, and the reasons for that, and again, our outline. We have seen gold and silver prices come down sharply. There they are, you can see them. Gold has sprung back a little bit today. It's trading up around 1722, having touched 1690 something once or twice over the past week. Silver has come down. It's trading around 1860 right now. It has not shown the kind of bounce back that gold has shown. And I think that there are some broader market issues that you have to take into account, which I'll get into in a second. But I think that what you're looking at right now is the market's been relatively quiet for a couple of days after the declines, and they may stay quiet for a few more hours. But I do think that real assets, not just gold and silver, but commodities in general, stocks and bonds, and real estate are all very much vulnerable to further downward moves over the next 5 weeks, 6 weeks into September. So I think what you're seeing is sort of a pause. The fact that silver hasn't rebounded, the fact that gold has rebounded relatively modestly, I think accentuates the vulnerability to another leg down over the rest of the summer, which is something that we've been talking about. Also, you have to pay attention to the fact that it's not gold and silver. Other commodities are off. Oil is off. It's down to about $94. It has given up more than half of the increase that it made from October into the second quarter of this year. Stocks have come down. They have picked up the last few days. But that's sort of a rebound and a consolidation after a period of weakness before what might be another period of weakness. And the similar situation is with bonds. You have several things going on. And as I think we've spoken before, you're pivoting away. The first half, the first 5 months of the year were characterized by all financial markets, nervous about inflation, which led to nervousness about rising interest rates, which led to nervousness about a possibility of a recession. And the financial market consensus has been tacking into the wind over the last month or so, sort of saying, look, inflation is a problem, but there are signs that it's coming under control. There are no signs of hyperinflation, despite what gold promoters will say. Interest rates are rising, but they probably won't rise as far and as fast as we worried about a month or two ago. And we probably will avoid a recession, at least in 2022, although we'll see next week the first flash GDP figure for the US, and it's either going to be very, very low or negative. And if it's negative, you'll have various pundits on the internet waving their arms hysterically saying we are in a recession. We've had 2 quarters of negative growth. So I think that the markets have become more moderate in their views of the economy. And I think that's the right attitude. So that's where we're at. Now, this week we had the ECB raise its interest rates. Last week we had the Bank of Canada with a 1% increase. Next week we have the FOMC. And this quiet, which I said has lasted for a few days now, but might not last much longer. I said hours. The quiet is while the markets wait to see what the FOMC does. If you go back 1 or 2 weeks ago, the CME indicator of market consensus of what the next Fed rate hike was had shifted to 1%. And evenly divided between 75 basis points and 1%. Still a big increase, and it could really hit financial markets, including gold and silver, next week when it happens. So I think this is a little bit of a calm before the storm, calm before the next leg down. But this is not a hurricane. This is a summer storm. The dollar's strength in recent weeks has come to a pause. We saw the dollar rise very strongly, partly because of the rise in US interest rates faster and sooner than the rise in interest rates in other major economies. Other major governments and monetary authorities are now playing catch up and raising their rates. And you've seen the dollar stop rising, came off a little bit, but it's basically been flat for most of this week. I think that that is the way to look at it. This is a pause in a period of dollar strength. And the dollar strength is a reflection of the greater strength in the US economy than in other economies. The fact that we're further away from Russia than other countries. And the increase, the stronger rise in interest rates. So we're looking at a world where we're seeing moderation, and it's coming at a time of the summer. That's what we're expecting. Next week could see a very volatile markets, not just gold and silver, but everything else. Gold and silver are also suffering from seasonal weakness, and we have seen lower investment demand. You know, investors in gold and silver ETFs have been reducing their holdings. I think in May and June, you saw a net reduction of totaling about 52 million ounces of silver that came out of ETFs. Gold ETFs are also off for the year to date. And you're also seeing weakness in some of the other gold and silver investment markets, as well as the futures and options markets. So we have been saying for some time that we thought that we would see weakness in gold and silver prices in the summertime. It's the heat of the summer. We're seeing weaknesses in gold and silver for a variety of reasons: macroeconomic, political, seasonal fabrication demand, and cyclical lower investment demand. And that's probably going to continue. That is what we see as the real economic landscape. And if you listen to mainstream economists, like real world economists who studied economics and have applied the profession of economic analysis for their entire careers, that's pretty much what you're hearing. There's a fantasy island out there of gold and silver promoters who will tell you, and there's this rising cacophony of hyperinflation, recession, and depression, and the collapse of the dollar, and the Great Reset, and silver and gold have fallen on price manipulation, even though they've fallen in line with every other financial asset that has been declining for all of those macroeconomic reasons I was just discussing. And the best of all, the pivot. The Fed is going to capitulate and give up raising interest rates. They may even lower interest rates as soon as next week. That's all just like a fantasy. People are saying, what do I need to have happen for my bullish view of gold and silver to come true? They're not saying, let's look at the evidence and say, what does the evidence present in the market today suggest about gold and silver prices? They say, why is it that gold and silver prices have fallen? What will it take for gold and silver prices to rise? Now, they happen to be wrong. You don't need a recession or a depression or hyperinflation or a collapse of the dollar for gold and silver prices to rise. And in fact, gold and silver prices will rise in the absence of that stuff, because in the absence of that stuff, investors have more investable funds. And let's say that the stock market continues to recover and maybe even moves to new highs, which it probably will at some point. Investors will be wealthier, and they will be that much more nervous because we'll be at new highs. So they will want more gold and silver. So those things don't necessarily push gold and silver prices higher. What really pushes gold and silver prices higher are nervous investors who are doing well. So I think that that's one of the things that you have to pay attention to. A lot of other nonsense going on in the markets, but let's not beat a dead horse. We are coming out with our 2022 PGM yearbook, Platinum Group Metals yearbook, next Tuesday, the 26th of July. You can register for the online free briefing, and you can buy the yearbook at our website. We think that you'll be there, want to be there to hear about our views of platinum, palladium, and rhodium to some extent. We also continue to encourage people to attend the Silver Symposium in Spokane at the end of August. You can sign up for it there. And we will be giving a speech of greater detail in silver, a 45-minute speech, I believe. We will have an open forum question and answer period, and we're talking to various journalists about moderating that session. And then we're going to have this evening presentation and discussion on the evidence for and against silver market conspiracy theories. It's a presentation that we've made since the late 1980s. Obviously, it has been added to and added to. The last time I gave it, I think it was for the executive committee of a major silver mining company, and it lasted 3 hours. And then we had a lunch and we discussed what was going on. We are planning to bring Matthew Hunter, who is the retired former head of market surveillance at the CFTC, to the Silver Symposium, at least to join us on that Tuesday evening presentation and discussion. And so it could be that much more interesting. Matthew is one of the most erudite and knowledgeable people I have known in the precious metals trading community and regulatory environment. I've known him since the late 1970s. I've watched the arc of his career. I've actually, in his earlier days, before he got into government regulatory issues, recommended him for a job with a major PGM company. But it's going to be a great event, and I encourage people to come there and learn about silver and silver mining companies. Go to our website, pick up a lot of information. I hope this has been informative, and that's about all I have for you right now. Stay cool if you're in Europe or North America. Stay warm if you're in the Southern Hemisphere, although I don't think that they're having particularly cold weather right now. But be good to yourself, be good to those around you. Take care of the whole world, because the whole world needs help. And even if you don't think that you can be helpful to the world, you probably can be. So don't undersell yourself. That's about all I've got for today. Take care.